Macroeconomic Determinants of Banks' Credit Risk, the Case of Bahrain. This article is written by Arabu Mabali. Contribution and originality of the study is that this research is widening the available empirical literature in the area of banks CR. Further, it could aid the Bahraini banks' supervisors and monetary policy designers to take some regulations and actions reducing the Bahraini banks' CR. Findings could also be beneficial to all stakeholders concerning the CR management. The aim of this research is to point out the macroeconomic variables which significantly determine, the bank's credit risk, CR, in Bahrain. To acquire this aim, exploratory analysis design has been deployed. The sample of this study includes the 7 listed banks in Bahraini Bourse. Quarterly data collected about the research variables over the period 2009 Q1 2019 Q3. The bank's CR in this research is measured by non-performing loans ratio. Regression model was implemented to test the impact of 3 selected macroeconomic variables on Bahraini banks' credit risk. The analyses found that inflation significantly affect the bank's CR, and this relationship is positive, while the real gross domestic product growth and oil returns significantly and positively affect it. The implication of this research highlights the credit policy makers in Bahraini banks, the macroeconomic variables which could be taken into consideration to sidestep any drop in the loan's repayment. This will avoid falling into banking crisis. The main limitation faced the researcher in this study is the test impact of the 3 macroeconomic variables only on the bank's CR. Although that it's justifiable, it is suggested to include more macroeconomic factors such as international reserves and unemployment rate, or related to the banks such as loan growth rate, capital adequacy, loan-to-deposit ratio, and income diversification. Thanks for watching this video of Journal of Asian Business Strategy Volume 10 Issue Number 2.